Good afternoon, students and service members, trading service members. Today we have a very special presentation by Neil Bradford on the bungees. So this is the additional material that we added to the wavy tunnel, our original trading setups. So we've now added a new lens, a new layer to the wavy tunnel, and who is the best person to present this? None other than Neil Bradford. So I'm going to turn it over to him right now. Thanks, Neil.
Thank you, Jody. I'm glad you think like that. I just hope I can help people make sense of it. What I'm going to do today, I'm going to start with some basics because you need to understand what the bungee is all about before you start trying to work out what it's telling you. So I've prepared some slides. We will do this over 2 sessions, this week and next week. And next week will be more, we will touch on trading today, but we will be doing more about actually trading using the bungee to help make trading decisions next week. Okay, so let's see where we go. This is what I've just been saying. The bungee can look like a tangled mess, sometimes puts traders off using it, or even making an attempt to try and understand what it's all about. But I want to try and demystify it, yeah? Because it is so informative. I find it so informative. It's difficult now for me to trade without it. I've got myself so used to it. Okay. So we're going to cover 1 or 2 discrete areas, if you like. What is the bungee? What's it made of? How does it move? How does it move relative to price and other indicators? And then probably next week we'll be looking at what the high probability moves, how the bungee predicts what might happen next, and therefore how it helps us to make trades. Okay. So we have a collection of indicators that act as confirmation for trading decisions, and we call the bunch of 6 indicators together, we call them the bungee. And for those of you that aren't aware, this is what they are. Yeah, 4 stochastics, a Williams percent R6, and an RSI 2. And this sequence is from slowest to fastest. Okay, and we do it in this order. So if you cannot see a bungee strand, it means it's hidden underneath the next fastest. It makes sure that the fastest indicators are not hidden. So we do it that way round. We've got a 7644 for the slowest in yellow, a 3433 in green, a 1633 in blue, and an 833 in red. The Williams percent R6 in purple, and the fastest one is an RSI 2 in black. Now, like every other indicator there is available to you, it is lagging. Yeah, not by much, and in some ways it can be quite predictive for a lagging indicator. And to make sense of it, we have to use the relationship between the bungee strands to see what the markets are actually doing. Okay. It helps if you can think of the bungee literally as a bungee rope with 6 separate strands of elastic. Each strand is a different strength, with the yellow being the strongest because it's 76 candles make up its location, so it takes a lot of shifting. And the black being the weakest, it's an RSI 2. It responds very rapidly to price. If you can imagine getting hold of a bungee strand and plucking at the weakest strand away from the rest of the rope, when you let go, it will snap back. And that's exactly what price is doing to the bungee strands. It's plucking them away from the main rope, and when price gives up pulling, the rope snaps back and price does a retrace or changes direction. And if the pull by price is strong enough, we can actually affect the whole rope. We can pull the whole rope away. And you can see on this diagram below, we would expect price over here. We've affected the black bungee strand. We would expect that to be a small, what's happened there? I've lost my screen share. Just bear with me a second. Let me get it back again. Don't know what happened there. Somebody stole my screen share. I've got it back. Can everybody see the screen? I'll have to reclaim my chat. So let's see what people are typing in the video.
Yes, we're good, Neil.
Yeah, okay, good. So yes, you can see from this diagram at the bottom of just the bungee, we would expect a small move in price to be pulling the black bungee away, a retrace down, a continuation higher that's beginning to pull the red one away, a snap back down, a continuation again. This time it's involved the blue here. And this move is so strong that each time we come back to the rope, to the main strand, we pull a bit harder, the green one's been affected, and eventually we've managed to affect the yellow and got it to the top channel. So that just demonstrates how the bungee moves. Yeah. And it's pulled around by price. So if you can visualize that, I find that very useful as a way of understanding what's going on. You might not, but it's worth a try. Okay. Now, it's interesting and very useful to know about one particular relationship that the green bungee strand has with the other wavy tunnel indicators. The green bungee is a stochastic 3433. The awesome oscillator is based on a MACD 34. The wavy tunnel wave is an exponential moving out the bridge 34. Yeah, and 34, of course, is a Fibonacci number. So you can see with this diagram here, with this vertical line, that when price breaks down through the wave, yeah, the green bungee is breaking through the middle of the channel, and the awesome oscillator is breaking through the zero line. Yeah, no surprise. Yeah, and this is one of the reasons why it fits so nicely, fits so well with wavy tunnel trading. Okay, everybody got that? Fibonacci number, that's good. When we are working with the bungee, when we're commenting in the group Skype chat room, or we're making notes on our trading analysis, we often use abbreviations, and it's worth being aware of some of the simple ones we use. Stretch away is when price plucks a strand or more than one strand away from the rest of the rope. SA. Snapback is when price lets go of that, relaxes, returns with a correction. Yeah, and that's the snapback. A tailed snapback, and we will look at these a bit later on, you will see what I mean, is when the strands that have been stretched away return, but price fails to make a new extreme. It's not part of an impulsive move. And the bungees are all within a channel, and that channel has an upper and lower reversal zone, above 80% and below 20%. And we refer to those as the URZ, LRZ. So you should, if you know these, you should not be confused when you see us making comments in text, either on the website or in Skype, wherever. And then a pinch is when all the strands come together, one on top of the other, all in the same place, at one of the extremes. And again, we will see those shortly. I keep getting this. I think there's a hangover. So, small moves, we've discussed this. Small moves affect the weaker strands, the black and the purple, creating stretchaways of those strands. Slightly stronger moves affect the red and the blue. And longer, stronger moves affect the green and the yellow strands. So we know what's going on. Now, all these strands during a move occupy a normal order. Yeah, price affects the black first, then the purple, then the red, then the blue, then the green, then the yellow. So the normal order of these strands is that they appear in the channel in that sequence. Yeah, and when that normal order is disrupted, that's when it's time to take note. That's when the bungee is starting to tell us what's going on. So here's an illustration of normal order. Look, yellow, blue above, green above yellow, blue above green, red above blue, purple above red, black above purple. And it's the same here. And the disruption to that normal order occurs when we get a snapback, a snapback, snapback. Yeah. But when we see these all one above the other as they should be, like that section there, that's called normal order. So already now, when you look at the bungee, you should be able to be, you should be beginning to make a little bit more sense of what you're looking at. Yeah, already, just with that information alone. Let's move on. So, having looked at normal order, let us look now at stretchaways. Here is a return to the wave of price, and you can see that the red and the blue, certainly the black and the purple, have been pulled by this move up, been pulled by price away from the green and the yellow. Yeah. And the green and the yellow have stayed low. Yeah, in fact, the yellow has stayed almost most of the time in the lower reversal zone. When that happens, when we get a snapback, we expect to make a new extreme. Now the snapback is there, right there, when the blue and the red bungees turn back over with that candle. And for those of you that are familiar with the wavy tunnel trades, you'll recognize this is a breakout 3. And when price moves back below the wave and the filter, they have a breakout 3 trade entry confirmed by the snapback on the bungee. Yeah, so we're beginning to see how useful it is. I personally, in my trading, I will not take a breakout 3 unless it's confirmed by the bungee stretch away and snapback. Because through observation, I've learned that if I don't get the bungee stretched away and snapback, there is a higher likelihood that the breakout 3 will fail to make a new low and actually continue higher. Yeah, but we can talk about that later. So it's important. It matters. Yeah, as a confirmation. This is not replacing wavy tunnel trades. This is simply a very useful indicator that confirms, that gives us confidence. Okay, and it's the same thing. We've got a stretch away here, and then a snapback. There's the stretch away. We've just talked about stretch aways. The move up has pulled the red and the blue away from the green and the yellow. Now, some stretch aways only involve the weaker strands. Look at that small stretch away there, and it's only really affected the black purple. And you will see other stretch aways where the green gets involved and is plucked away with the others away from the yellow, and that's usually associated with a bigger move. But the rules are the same. The snapback here, let me clean those arrows off the screen. The snapback right there, red and purple, red and blue turned back down, yeah, and price broke below the wave in the filter. There's the confirmation for the trade, yeah. And under these circumstances, we expect the snapback to make a new extreme. We expect it to come below that previous fractal low where the stretch away started. Okay, so now hopefully things are beginning to clarify. The mist is beginning to clear a little bit. Yeah, we can look now at the bungee at the bottom of the chart and at least make some sort of sense of it. Here's a failed snapback. Yeah. When we talk about failed snapbacks, we're talking about the failure of price to make a new low. Yeah. In our previous example, price came right down and made a new low. Yeah. In this example, price has not made a new low. It's a failed snapback. Yeah. The bungee still snapped back. Yeah. We got our stretch away up here, and we've got our snapback right to the opposite reversal zone. So when we talk about failed snapbacks, the failure bit refers to price, not to the bungee. The bungee still snaps back, but price fails to make a new extreme. Now, there were clues that this might happen in that we've got a very steeply rising yellow and green. They've been pulled by this steep, fast price action up here. They've been affected as well. And they've reached the middle of the channel, if they reach the middle of the channel or even push higher than the middle of the channel, then the chances of making a new extreme are reduced. Yeah, you're beginning to get more interested in a failed snapback and ultimately the continuation to a new high above there as opposed to a new low below the previous pivot low. So you should now be beginning to see the difference at this point up to that box. Yeah, don't look any further right than that box. When the bungees turn back down again, that picture is looking more likely you're going to get a retrace and a continuation higher than a new extreme. And probably it's best if we just nip back to that previous one. Yeah, and again, we'll draw a box where the snapback kicked in. On this occasion, we made a new low. And look how low the green and the yellow bungees are. Look at the difference. Okay, everybody happy with the difference between a snapback and a failed snapback? Everybody say, tell you what, we'll assume everybody is. If they're not, say no. If you're not happy, if you don't know what's going on, please say no. We'll assume everybody does. Well, it looks amazing, but it's only an indicator. There are many indicators that tell us things. Yeah? The wave count is an indicator. That tells us what's going on. The awesome oscillator gives us some clues. Yeah, the relationship between the wave and the tunnel. They are indicators. They give us clues. The wave crosses the tunnel. It tells us something about what's happening in the market. But I particularly like the Bungee. I think it's very informative. Okay. Sorry, let me just move that over there. Yes, RJP. Don't know what to call you, but yes, you're right, and I will mention that before the end of today. Divergences. You're absolutely right. I do take note of them. Okay, failed snapbacks. Now, for stronger moves, than just the red bungee moving around and the blue bungee, you will notice that we get moves of the green bungee and the yellow bungee across the channel. Yeah, and you can see here, the green bungee has moved right from one side to the other, back down again, back up again, back down again, back up again. Actually, that last one was wrong. Back, up again. Yeah, and the yellow bungee has moved, or is moving, up to the top, right at the end here. Prior to that, the yellow bungee has stayed low. Yeah, it's not past the halfway mark, and it's stayed low. That's typical of an impulsive move. Again, we'll look at that later on. But you can see that these slower bungees cross the channel based on bigger moves. And the bigger moves this is where we start to mention the semaphores. The bigger moves are the higher moves on the semaphores. The smallest move being the blue, the next size of move being the red. The yellow semaphores tend to relate to the green bungee, reaching the opposite side of the channel. And then you will see, again, with some slides later on to show you that the yellow bungee moves across the channel relative to the noble and royal semaphores, the grey and purple arrows. Okay, so we're understanding how the bungee moves.
Neil, there is a question. Maybe I'll read the question.
I can see it.
Okay, but just read it before you answer it so people know what it is.
Okay. Yeah, you have to post your questions to everyone. Thank you, Jody. Yes, please. If you just send, you can see just above the text box, send to, make sure you've changed that to everyone, and then I'll see it as well as Jody. Yes, Kevin, as a rule of thumb, yes, it does.
Please read the question because those listening to the recording will not see the question. That's what I meant.
Right, okay. This is a question about stretchaways, and the question is, do both the blue and the red have to turn? Yeah, even if the blue does not stretch away. Well, there is an example on this chart. We can see it here. We've got a red, black, and purple stretch away, and the blue has stayed low. Yeah. So does the blue have to turn under those circumstances? You probably would not have to wait for it. Yeah, you have to take some of this with a little bit of a broad approach. Yeah, it's not absolute any more than anything else in trading. It's not absolute. Yeah. If I say something happens, what I mean is it's highly likely to happen. But I suspect that none of what I say will be 100%. And it's the same reason why a wave count might need to be changed, because a wave becomes extended. Yeah, and you could not necessarily anticipate that when it first started. A correction becomes complex. Yeah, a harmonic pattern evaporates because the move is too strong and it just goes straight past point D and it just disappears. Yeah, all these things on any indicator you like, the market is random, chaotic, and nothing is 100%. So you're right to pull this one out. This is low, is the blue, and under those circumstances, I would probably be quite happy for the red to snap back. So thank you for that question. The stretchaways I trade tend to involve the blue and the red. And that nicely leads us into the next slide, actually, where I want to talk to you about multiple time frames. I'm not able to trade a single time frame chart. You just can't do it. I have to look up to the higher time frame to get things in perspective, and I have to look to the lower time frame to find the best place to enter. I prefer to trade real time rather than place market orders. That's just my style of trading. So it's important to me to look up and look down. So what I want to do is talk to you about multiple time frames, and you will see how the different bungee strands move. On this little move down on this H4 chart, you can see from the top here, the red bungees come quite a way down, the black-purple bungees come right into the low reversal zone, the blue's been affected less than the red, the green's been affected slightly. Yeah, they're all beginning to be spread out because obviously the stronger strands are stronger and need more of a move to shift them, right? But we've got price in the wave. Are we going to get a breakout 3? Yeah, is this going to be a breakout 3 up here? We need to know. Well, everything looks right on here. Well, I say everything looks right. I must confess, I prefer a nice, neat 3-wave move into the wave before a breakout 3. But anyway, if you look at these two vertical lines, what we can do now is go down to the hourly. And what do you expect to see? Yeah, if on the 4-hour chart, the black and purple bungees are at the bottom, what do you expect to see when you've got 4 times as many candles in this move on a 1-hour chart? It's not going to look the same as this. Yeah, and that's where we're going next. And the reason we're going next, these are the two blue lines we had, blue vertical lines on the 4-hour chart. That's the move. And you can see that on the 1-hour chart, this has affected all the bungee strands up to the green, bringing them all down into the low reversal zone. And the yellow bungee has been pulled slightly back. Now, with this small piece of chart, we don't know if the yellow bungee is on its way to the top, and this is just a retrace. Yeah, we need to see more of the chart, so don't worry too much about the yellow. But you can see that we've involved more of the strands in that same move. Yeah. Now, we expect a move a lot higher. Yeah, we expect this sharp reversal down here to take us higher. And this would be a breakout 4, bounce off the tunnel. And that's what we usually get with a breakout 3 on a higher time frame. We see a breakout 4 on the next lower time frame. Okay. Now, what we assume is this will look like a pinch at the bottom on the M15 chart. If we go down one more time frame, we must surely involve the yellow in this move down. Surely we must. If we multiply the number of candles by 4 yet again, let's go have a look. Okay, there's the move between the blue lines. And yes, there's the pinch. Right at the bottom there, we've got all the bungees coming down, one on top of the other, in the lower reversal zone. Yeah. Whereas on the H4, yeah, all we got was a relatively small move. Now this, in this instance, it's not helping us make a decision for the 4-hour trade. Because this time frame is too far away from 4 hours. Yeah, we're talking 16 candles for one 4-hour candle. So this can go up and down within one 4-hour candle. But the point of this was to illustrate how the same move looks on the bungee. Yeah, and look at this first move on the M15 chart is looking very similar there on the bungee to that first move on the H4. Let's go back to the H4 and just remind ourselves what we were looking at. Whoops, there we go. So we were looking for a stretch away, black and purple involving the red into the wave. And if you're not sure what's going on, it's really, really useful to go down a time frame. Yeah, go back down the time frame, because you might find the next lower time frame is telling you about the trade, or telling you about the move, or the likelihood of a move. Yeah, so I just want to encourage you to use lots of different time frames moving down. Okay. So moves relative to price and other indicators. Well, we've already looked at stretchaways and snapbacks. Yeah. Stretchaways involving the red and the blue tend to come back to the wave. Yeah. And stretchaways usually happen as part of the correction of a trending move. Yeah. There's the correction. There's the stretchaway. But the trending move is down. Yeah. And again, here, a stretchaway, but against the direction of the trend. That's when you get stretchaways. Yeah. And the other time you get stretchaways is actually at a reversal. And here's the reversal from the bottom. There's the stretchaway. And it's the A leg. It's the first move up of the correction that gives you the stretchaway. The snapback is the correction of the correction. It's the wave B or the wave 2. Yeah. And in this case, I'll mention it here, although I think we might talk about it later. In this case, can you see how the red bungee is now forming a stretch away from the green and the blue down here? Yeah? So the stretch away up was so strong, it's pulled the yellow to the middle, and the snapback has given us a stretch away to the opposite side of the yellow and away from the green and the blue, which is still high. So that tells the red being the weakest strand, the red is going to snap back up to the green. Yeah. First. It must, because it's the weakest strand. The blue and the green aren't going to come down to meet the yellow until the red's moved up. In this case, the blue did slightly, and then the red and the blue have gone up to the green, up to the top of the channel to meet the green. Yeah. So if you see a situation, let me take these lines off the chart. If you see a situation, let me focus in on it, the box around it. If you see a situation like that, it's obvious, isn't it? Look, stretch away for the initial move, snap back for the retrace, but the snapback has created a stretch away in the opposite direction. That gives you a lot of confidence in going long. Yeah. In this case, it gives you a lot of confidence in what becomes fill the gap trade. We had a stretch away for the price to wave element. We had a snapback for the retrace. And the snapback created a stretch away the opposite way. And then the subsequent snapback takes us higher for the fill the gap. And it just confirms the move, gives us a lot of confidence in it. Okay, any questions on that bit then? Yeah, how the bungee relates to wavy tunnel trades. Yeah, in an impulsive move down, a stretch away and a snapback relate to breakout threes. and in a correction, the stretch away and the snap back and the subsequent move relate to the A, B, C, the 1, 2, 3 element of a bigger move in the opposite direction. Okay. And then this next sentence back here talking about snapbacks shows you or illustrates to you that in the trending move, the snapback makes a new extreme. And in the corrective move, the snapback is a failed snapback. And that's how you know when a move's likely to be over, or at least temporarily over, doing a bigger retrace. A lot of traders use the tunnel on every time frame. Yeah, I'm not sure exactly what you mean, but yes, the tunnel is very important. It's a support or resistance level, is the tunnel. Sure it is. Okay.
And in fact, just to highlight that, we do have the higher time frame tunnel now on all of the charts. So Neil's topic today is the bungee, but we do use the higher time frame tunnel on the charts now.
It's there. It's just crept into my screen clipping. It's just there. That's the higher time frame tunnel.
And for those of you who aren't aware, if you're in the services, you will be able to download the MP4 and the new jar file for MotiveWave with the higher time frame tunnel on it. And there is a document in the site which tells you what numbers to use for the higher time frame tunnel.
Yes, there is.
Neil, Vicky's asking a question privately. Have you ever tried to trade just by using the bungee and then later checking it out with the price action?
I have tried it, and some traders who aren't aware of wavy tunnel and have really, really understood the bungee can do it. But equally, there are traders who can trade price action without any indicators. Yeah. So it's no surprise that the addition of an indicator does help. It is relatively easy to know what's going on. So let me very quickly show you a live chart. If I turn off the scrolling so that we can move back on this chart, and I get rid of price action altogether, perhaps I need to zoom in a bit. From what you have already learned, yeah, you know that this point here, price action is likely to be above the tunnel. At this point here, price action is crossing the wave. At this point here, price action has arrived in the gap between the wave and the tunnel. And at this point here, price action is back below the tunnel on the other side. Let's see if we're right. I'm assuming this is a trending move. So what did we say? We said price was above the tunnel. And down here we said price was below the tunnel. And at this point, we said price action is crossing the wave, so it is. Yeah, and we said down here price action was between the wave and the tunnel. It is. It's a strong move, and it's almost at the tunnel. But so once you get familiar with what the bungee is telling you, it's reflecting price action quite accurately. Yeah, and you can do that. You can go to. You can move to. Hang on. Let me just push this back up. You can move to any random bit of chart, and you can see from a low, we have a stretch away, yeah, and we have a snapback. Now, the yellow bungee is moving up, the green bungee is moving up here, yeah. So you can see price has probably come into the wave on this move up, on this stretch away, yeah. It's retraced back down, and then it's moved higher. And you can see that because there's the bungee in the middle of the channel. So that tells us that we initially went into the wave, but not, maybe we just crossed the middle and we're waiting for the green bungee to catch up. The retrace came back down, it failed to make a new low, and then because the green bungees kept going, price has then crossed the wave and come back out the top of the wave here. So let's go see if that actually happened on price. So here we said price has returned to the wave. We said the green bungee, it's probably waiting up here for the green bungee to catch up. Well, it needed to, because look, we crossed the wave here. So the green bungee's come up through the halfway. It retraced, we said, and then it's moved, price has moved to the opposite side of the wave. And there it is, there's the three-wave move. Up, down, up. Yeah, it's an extremely informative indicator telling you about price action. Right, let's just have a look. Could I explain the black and purple again? They're just faster moves. The black and purple are just shorter moves. Yeah. I like this move here. Black and purple have stretched away. They've given us a failed snapback, and the red bungee was on its way to the top. So it's the same thing, it's just on a smaller scale. The red bungee was going to the top. Meanwhile, the black and purple stretched away, snapped back below the red, and then came back up. It's very similar to what we were discussing before. Okay, let me see if I can restart this slideshow on the same slide. Got where we're up to. Yeah. Just bear with me. Two-way B, probably that one. Is there a bungee move typical of price just going to the filter? There may be, but it's all relative to what's happened to history, to what's happened before, to previous price action. Yeah. If there is a long, strong move and price has moved a long way away from the wave and the filter, then any retrace is going to involve more than just the black. Yeah. If it's a small, tight move where we're hugging the edge of the wave, then the retrace to the wave might just involve the black. So I'm afraid it's not a simple answer for you there. I'm not trying to dodge the question. It's just that's how life is. Okay. Yeah. Failed snapback. Okay. Third wave high. Yes, we covered that one. Good. Moves across the channel. Yeah, we looked at that. I think we covered all that. Yeah. It is worth mentioning here or bringing into the semaphores because these indicators all work together. Yeah, we've talked about how the green bungee relates to the awesome oscillator and the wave. And I'm going to tell you, you will see the green bungee cross the channel like that. And when it does, you will get a matching pair of yellow semaphores. The green bungee reaching the reversal zone is associated with a yellow semaphore. There it goes back to the top, yellow semaphore. Yeah. Here it comes back to the bottom. It arrived here and stayed flat. And there's your associated yellow semaphore. Then it went to the top. There's your yellow semaphore. Yellow semaphores, I know it's not strictly the bungee, but yellow semaphores always, that is 99.999% of the time, yellow semaphores always appear on opposite sides of the wave. The yellow bungee crosses the channel when price crosses the wave and the tunnel. Okay, so in this move down here, where we crossed the wave and the tunnel, yeah, not only did the green bungee move from one side of the channel to the other, but so did the yellow, because price crossed both the wave and the tunnel, yeah, and is associated with a noble or royal semaphore. Okay, this particular bit of chart hasn't really got any more noble or royal semaphores on to actually demonstrate that. But it does bring me to mention on that fraction of a percent of the times when these things don't hang together, it's usually because there has been either an extended period of sideways action, that can throw things out, or a long, strong, extended impulsive wave, that can also throw things out slightly. You will get used to that. The more and more you look at the bungee, the more and more you understand what it's telling you, the more you will appreciate where these little anomalies are. Okay. Got a couple more slides to get through. Hugging the reversal zone, the yellow bungee is what I want you to look at here. During this move up, the yellow bungee crossed very quickly across the channel, and then it's not going anywhere. Price isn't crossing the tunnel. So the yellow bungee is hugging. When you see that yellow bungee staying near the top, not coming down very far, you need to be trading these snapbacks, breakout threes. You need to be looking for the new highs. Yeah, they're all valid wavy tunnel trades, either on the current time frame or one higher or one lower. They'll all be there somewhere. Breakout threes usually. Yeah. So this is how the bungee demonstrates a strong move with the wave above the tunnel, usually a gap widening. Yeah. And once here we get the gap narrowing, once we get a more substantial retrace, you can see the bungees come down to the middle of the channel, the yellow bungee, and it might be a sign that it's all over. Divergences. We had it. Oh, sorry. What's the difference between a royal and a noble? My apologies. Let's go back to that previous chart. Let me cover that at the end, please, Helene. Yeah, let me cover that at the end. I'll go back to my charts and show you that. Let's do this first. So once you get awesome oscillator divergence, if you also have divergence on the bungee, and there's our new high, and there's a lower high on the red, and there's a lower high on the blue, yeah, divergence. When you see that, it gives you much more confidence, yeah, in the turnaround, in the reversal of the market. Now, and in the same way you get bar divergence on the awesome, I want you also to look at those last four candles, and even there you can see divergence on the green, the blue, the red, yeah. So we've got divergence for the bigger move and divergence right at the end, and what happens next? The market reverses. So do look for bungee divergences as well as awesome oscillator divergences. They are extremely helpful. Yeah. Inverse or hidden divergence. Yeah, we all know what inverse or hidden divergence looks like on the awesome oscillator. Here is a higher low, but here is a lower low on the red bungee. Yeah. So you're in for a reversal, and it's no surprise we're at the tunnel. There will be other reasons, but when you see that, in this case, we've got a stretch away. We've got a snapback. And when you see that hidden or inverse divergence, negative divergence, some people call it, yeah, then it gives you confidence in the failed snapback and the fact that the market is likely to move to a new high. I think we've got another slide on that. Bear with me a second. Yeah. And in this case, the hidden divergence gives us massive confidence in the fill the gap trade. Yeah. Here's a price to wave. Here's a retrace. Here's a fill the gap. But what we're interested in is that lower high, but a higher high on the red and the green, red, blue, and green. No, sorry, red and blue bungees. A higher high for that retrace. It's done the upside down what we were talking about earlier. The initial stretch away has snapped back and created a stretch away in the opposite direction. confirming a move lower down here. And there it goes. So there's hidden divergence or negative divergence confirming a fill the gap trade. Yes, I do take counter trend trades, but I tend to take, if I'm trading counter trend, the one I'm interested in is the fill the gap, because that's the one after all the confirmations. Yeah. This one's a bit risky, the price to wave. But once you've had the price to wave and you've had a retrace and you've got confirmation from your awesome oscillator and your bungee and your semaphores, then that I've got a high probability of success on the fill the gap. So I do take counter trend trades, yeah, and the time frame is irrelevant, except that the 1 minute chart, the spread tends to be quite significant as a proportion of the trade. But these rules, and this is why I haven't shown it on the chart, you don't know if this is a daily, weekly, monthly, 1 minute, 5 minute chart. The rules are exactly the same. It doesn't matter. It really doesn't matter. Okay, I don't know how much further we're going to go. We must be nearing the end. High probability movement, right. We will go on to this next week. We're going to look at divergence, inverse and hidden divergence, failed snapbacks, Bungee's transtraversing the channel, black in the reversal zone. The purple bungee is uncannily predictive. It is. For a lagging indicator, it is brilliant. We're going to look at that. Noble and Royal Semaphores with the yellow bungee. Yeah, we'll look at that. Yellow Semaphores with the green bungee. We've already touched on those. And we will also look at how the bungee helps us trade. Those will be next time. Okay. So I hope that was useful for you. Usual rules, be disciplined, be patient, wait for the right setups, and most of all, have fun. So that's the end of that. I want to go back to my charts just to look at that question about the semaphores. What's the difference between a royal and a noble? Okay, let's have a look very quickly at that. We've got time, haven't we, Jodie?
Yeah, yes, we do, Neil.
Right, good. Okay. At the risk of boring people who've already seen this, I wonder if I can change colour. I can't always. Yes, I can. The blue semaphores show us moves. Whoops, need to be on that. Of a small fractal nature. Yeah. The blue ones are behind the reds. They're underneath. They're also underneath. There's a little anomaly, isn't there? Oh no, there it is. They're also underneath the yellows and they're underneath everything. So there. The blue semaphores show you ends of trends. The red semaphores show you ends of trends of a slightly bigger nature. Yeah. The yellow semaphores show you ends of trends, even bigger moves. Yeah. The noble semaphores, that is the grey arrows that appear on top of the yellow semaphores, are underneath the purple ones because they're smaller. So those are the moves for the purple, for the grey or noble semaphores. Yeah, and then all the royal semaphores are moves of a bigger nature. They happen to coincide there, but they don't coincide there. Now imagine looking at a chart covered in trend lines like that. You wouldn't be able to see the wood for the trees. So all that's shown are the blue, red, yellow diamonds, the grey arrows and the purple arrows. And in that sequence, they are just simply showing the ends of fractal moves of increasing size. I take all that away, now you know what the semaphores are, and you can visualize it, hopefully. Yeah, and the royal and noble are just the top end moves that we look at. We could look at bigger ones, but I don't think it's necessary for the purposes of our trading. I think that the royal ones are big enough. What's the next? Say counter trend. I've not had a problem with the semaphores being a resource hog, and this is slightly off topic again. What I find is a resource hog is with MT4 certainly, and I don't know about other platforms, but I just want you to add this up. In a profile, in this case I've got a Japanese yen profile, yeah, and I've got lots of charts on here, but they are all Japanese yen charts, okay? What MT4 is doing, tools, options, charts, there are 5,000 bars in my charts, that's all. I keep that low. You could have 250,000 in yours, 250,000. And why that's important is that for every bar, for every tick, for every indicator, MT4 is recalculating. It's recalculating history as well to see if it needs to shuffle an indicator up or down slightly or change the value of a semaphore. It's not just the semaphores. So think about it. Every tick for every indicator, yeah, for every currency pair, for every bar in the chart. And that's why I restrict my profiles, and you'll see them down here, to one currency pair. They're all down here. One pair per profile. And I restrict the number of bars to 5,000. And I never have a problem with resource, and I do not have a top-of-the-range computer by any means. Okay? If you put half a dozen or more different currency pairs and all the wavy tunnel indicators for each currency pair on a chart, and you've got the number of bars on your chart set to 250,000, because you want to look at acres and acres of history for some reason, then your machine will go slow, guaranteed. It will. It just will. So before you blame semaphores, just try making a few adjustments and see if the problem goes away. Okay, yeah, there are some MT4 tips. There are some videos on the website with MT4. And then one final thing before I pack in, I'd like to show you. Let me just go into the website. On the browser. Right. Are they in there? The MT4 short video clips? No, not that one. My apologies. It might be in there. Ah,
Neil, what are you looking for?
it's the series of 3 videos I did on. There they are.
Okay.
They're under tools. MT4 tips and tricks. Yeah. There are 4 videos in there on MT4 and how to get the most out of it. Yeah, I did some sessions last year specifically on how to get the most out of MT4. So if you use MT4, please have a look at that. It's in the website under the Elliott Wave Ultimate Desk tab, under the Tools section. Okay, and it's down here. Now, the other thing that's in here that we will look at maybe next week is this Trade Checklist Assistant. Before next week, it might be useful if you want to download that. There is a zip file with an Excel spreadsheet and an instruction page, a PDF. And it's an idea that would benefit from help from other traders. And it's a first attempt at a checklist to just check whether the setup for a trade is right, whether you're likely to get a successful trade or not. Okay, or whether it, just to help you verify that you've got a good quality wavy tunnel trade. It's based on the wavy tunnel trade, so you've only got 6 to play with. Price to wave, fill the gap, breakout 1, 2, 3, and 4. So we'll touch on that. You might find it useful. If you don't use that, my personal recommendation is that you have your own checklist, because there is a tendency for traders to trade based on a hunch, to trade based on an emotion, to trade based on an opinion. And those sorts of words have no place in trading. And that is why we had, bear with me a second, that is why.
While you're finding that, I'm just going to tell people where they can find the downloads for the new templates for the MT4 and the Motive Wave. Those are in the course site, ElliottWaveUltimate.com, and you can find those under within the tutorials folder under webinar recordings. Tutorials folder under webinar recordings in the course website.
Yes, Henry, I see your comment about the password. The password, if you read the instructions that come with it, it tells you where to enter the password. It's on the disclaimer tab. Okay. I was just on this slide. This is why you'll be bored to tears if you hear me at the end of a trading room. I say this so often. Nowhere in here does it say follow your opinion. Nowhere in here does it say trade based on a hunch. It says be disciplined and be patient. So if you don't use the trade checklist that's on the website, please build your own. Make sure you're trading to a set of rules. And what better rules to trade with than the way the tunnel rules, really. The password for February is also posted in exactly the same place. That went in at the end of January. Yeah. And again, that's in the tools section. So on the disclaimer tab, you'll see where to enter that password. It shouldn't be read-only.
Okay, Neil, you'll check it out after the class.
I will check that out.
Yeah.
I've got some coaching to do in about 40 minutes, and I need to grab myself something to eat, so it won't be this evening for me. But if you've still got problems tomorrow, talk to me during the day on Skype. Okay, and I'll sort you out with that. And that is that. Thank you very much.
Thank you, Neil. Thank you so much. That was a great session. And Neil is going to continue on with this next Monday, and then on Wednesday for people in the December course, we will review some of these concepts. Thanks, Neil.
Thank you. Thank you all for being here. I hope you join us again next Monday, same time, same place. And we'll look at high probability events and trades.